It's time for a Senior Citizens Forum. I'm Janice Wood, your host. A Senior Citizens Forum is being sponsored by Benefits for You Too Insurance Services, where they provide Medicare supplement, Medicare Advantage plans, and prescription drug plans for people that are age 65 and older, and for people younger than 65 who have certain qualifying conditions. But today we're not talking about Medicare. We're going to be talking about your existing life insurance. And my guest here is Josh O'Neill.
Hey, thank you very much for having me, Janice.
All right, well, thank you for coming on a Senior Citizens Forum.
Oh, no problem, anytime.
Yeah, great. And if you are an empty nester and you're sitting there with that life insurance policy, may it be term, may it be whole life universal, and you have some money in it, and you're sitting there watching TV and you see a commercial come up and it says, we can buy that insurance for you. So my question to Josh, who has been doing this for about a year or so now, okay? And I know he's been doing a lot of preparation for this particular show, okay? Is it a good idea always to sell your insurance, or what else can you do with that equity in those insurance policies?
Yeah, absolutely. Thank you very much again for having me, Janice.
You bet.
So a big part of when it comes to these companies asking for it, I come from a company who does not buy this, so I try to keep my opinion unbiased, but basically what they're looking at is they have a team of actuaries who go into each policy, looks at what value it's worth, as they aren't necessarily going to be getting that sort of death benefit from you. What they're looking for is, when you pass on, they'll be receiving your death benefit, which will be taxed for them, so they keep that in mind. So when they say, we'll buy your your life policy, they're basically saying, okay, we want to make money at the end of the day, and we'll give you a relatively low amount of what it's worth in case you die. But it's tough for you to have that sort of value, as you don't get the death benefit unless you pass on yourself.
So let me ask you a question. So if I have a policy, and I'm just going to use round numbers, okay? So if I have, let's say, $1 million sitting in a life insurance policy, and somebody wants to buy it from me, are they taking a percentage of that and then giving me something back? What am I getting?
Yeah, basically what you're getting is whatever they're going to offer you. Since they don't have insurable interest on you, they don't have a reason for you, your well-being is basically you have a price on your head, sort of like a bounty, but in a less extreme way, that they'll be paying you off for your policy, so you get money immediately, which is really nice because you won't be seeing a good chunk of that, and they'll have a bet that you'll be, they'll need that policy paid up by the time that they get their money's worth for it.
Okay, so if on that $1 million, okay, I say I need $800,000 of it, okay? So they're gonna keep 200,000 and I keep 800,000?
No, definitely not. The only real time you should consider selling your life insurance policy is that you are fully out of money, you have nowhere else to go. It's more of a last resort.
Okay.
As there's many different ways to use your life insurance policy. As with a whole life policy, you can look at your accumulated value, and as long as all premiums are paid, you are able to take from it and use it as such, and you'll be taxed on it as it's not a way to you're using your death benefit. But we talked earlier about riders, and a big part is your chronic illness rider. You have medical bills to pay off. You have different medical expenses that, it would be really nice to have that money now. With your chronic illness rider, you're able to take money from your death benefit and pay off those bills. So another way that you can use your life insurance policy.
Well, I like the thing with a whole life insurance policy or universal life insurance policy is that, let's say I wanted to go on a trip. Mm-hmm. I could do that.
Yeah, you absolutely can. Yeah, you can take money from your accumulated value, and the growth is still non-taxed, and you're able to go take a trip. You're able to enjoy it. The death benefit will go down a little bit, but you still have money stored in the bank and in your death benefit itself.
Okay. So if I say I have my home and I don't want to take equity out of my home, and it needs, as all properties need, upkeep, okay?
Yes.
So I could borrow money from that policy and fix up my home, and then maybe I haven't been paying premiums for a while, pay that money back if I wanted to?
Yeah, absolutely. And a common misconception of taking a loan against your policy is that I need to take money from myself back into the policy. You don't have to do that. As with the accumulation of your policy, it will grow faster than the loan and the interest itself, so it'll pay off itself.
Okay. So I always find that interesting. I know that the demographics that we're talking about here are a little different. So as you get into this more and more, you're going to find people that have existing policies.
Yes.
Right. And they do all kinds of different types of things with the equity that they have in those policies.
Right. Yeah. And a big thing that we talked about earlier is with your riders, with being able to have more to do with your life insurance policy, it's been come on pretty recently. It used to be only your death benefit.
Okay, so not everybody's going to have the same riders according to their policy.
Yeah.
Okay, so what is a rider? So if I have $1 million again, and I'm sitting there, what different riders could I be finding in that existing policy?
Yeah, absolutely. As time goes on, there are usually more riders because more insurance companies would like your business, would like your money, and that's how they compete. They'll have different ways to get into it. So different riders you could find is your guaranteed lifetime income rider, which is usually found in an annuity or at the back end of your life insurance. You can find what we talked about before, your chronic illness rider. So those are the main two riders you'll find.
Okay. So let's look at two things right here. So let's look at the chronic illness rider, because that's real important. Because if all of a sudden, it doesn't matter what age you are, okay? All of a sudden you get sick. And I remember when I did a little bit of life insurance, we always had the examples of, that we talked about of somebody who's 30 years old, okay? They have small children, and all of a sudden they've been diagnosed with something, okay? And they're not able to work for maybe not at all or for a period of time. Are they able, with that critical illness rider, go in and take money from that policy?
Yeah, I mean, even better. Not only can you take money from your death benefit policy. Ones who qualify can also do an income doubler. If you're unable to work, there's a few conditions that maybe you're eating, you're walking, you're getting ready. If you're unable to do that, those sort of things, your policy can also come in as an income supply for you. And if you would like to take out of your accumulation value, you can also put in distributions for long-term care. So you could also pay for that along with your medical bills, all through the same life insurance policy.
And that's real important, that long-term care.
Yes.
We don't think we're going to need long-term care, but you don't know. I mean, I don't remember the statistics, but I know the statistics are high and the amount of people that need long-term care. And one of the things Medicare doesn't cover is long-term care.
Right.
It will cover 100 days of skilled nursing, and it will give you some home health care, but it's limited.
Right.
So a long-term care policy, from my understanding, because I'm not in the life insurance world any longer, okay, is they're harder to come by.
Yeah, absolutely. And a big part of it, it's becoming less and less affordable. And if you're sitting on a life insurance policy that has accumulated pretty well, it would be a good idea to use that towards long-term care.
Right, and that to me is really a good benefit, especially if you're sitting there with, as my example, $1 million policy. You can take that equity out and use it, and you shouldn't feel bad that you're not leaving that beneficiary any money, because they want to. That beneficiary, you feel, really cares about you.
Yeah.
And you need the help, and you earned it, and that's that.
Yeah, absolutely. You should have access to what you've already put into. Your investment should pay off. If you'll still be leaving a legacy. There's no way you're going to be using everything from your life insurance policy, so your beneficiaries will still be left with something.
Yes.
And so you should be rest assured that your care is not putting a burden on them, as you've already paid for it.
Right. So that's always interesting. That long-term care and my working with people seems to be a real issue.
Okay. Absolutely.
Now, the other thing I've seen people do, okay, they've taken equity out, and maybe now you have all those wonderful grandchildren, okay, and they'll start life insurance policies or some other type of program for their grandchildren.
Yeah. You don't need to insure someone. They don't have to be the one who's putting money into the account. As long as you have insurable interests, so you care about them, living, being around, so family, grandchildren, you can take a policy out on them and fund anything that they're going to be going for. As I work with a lot of clients who are trying to fund their kids' college, as that's getting more and more expensive. But using a life insurance policy to accumulate that value, and then once they need it, it's ready for them.
Yeah, so that's, to me, is so important. You're sitting there with all that equity in a policy to be using it. Also, you can be using it to cover your own expenses when you pass away.
Yeah.
You can have set aside, and you can go out and purchase your own. Because I always like the guy who comes in and says, plan, okay?
Yeah.
For that death benefit.
Yes, exactly.
Yeah.
And at the end of the day, a plan is always better than no plan. When you're using life insurance, a couple things I love about it is that it has tax-free gains. So when you do eventually take it out, the government's not going to come knocking on your door, and you can use it for anything. It's something that's very hard to come by with a lot of accounts these days.
Yeah. And one of the things you said, the government's going to come back, we're talking about it not being taxed.
Right.
So if I borrow money out of that, am I going to be taxed for that?
Not at all. When you're funding it, it's with post-tax dollars, so you won't be taxed on the back end, so all those gains are your gains.
That and people don't realize that life insurance is not taxed.
Right.
And we're not talking about term life insurance because that is taxed.
So term life insurance, you don't get to take anything out of that policy. It's more of your safety net for that time being. So normally it's about 20 years, and in that time you're paying as if you're about to pay off about how much is the coverage. So that eventually, if assuming you have a good agent, will transform that into a permanent life insurance that can accumulate the value and will still cover you now that you can afford something a lot better than a term.
Okay. Now, the other thing I find with my example is going to be, I can remember my brother, he calls me up, and this is probably about 15 years ago when he goes, I've got this insurance policy that's coming due, and all of a sudden, the premium is going to triple or quadruple,
Yes.
okay? And he goes, do I want it? And I'm going, well, what kind of policy is it? I mean, I don't know. Okay. I bought it. I could afford it at the time.
Right.
Okay. But all of a sudden,
Yeah, what do you do?
what can you do? Can you convert it?
Yeah, absolutely. Especially with term insurances, almost any company can convert that term insurance into a permanent life insurance. As the biggest advantage of that is, one, you're not paying exorbitant fees and it's actually building something,
Right.
but also you don't have to go through underwriting to see what sort of health you're in. And when it
Okay.
comes to buying, or a company trying to buy your life insurance, you're going to have to go through the same underwriting process as if you were going to buy out a new policy.
Okay, well, that's interesting. So if a company wants to buy my term life insurance, I have to go through underwriting again.
Yes.
And so that means they're going to come out and do a health check on me like they do with regular health insurance?
Yeah, basically it depends what your medical records say, where you're at right now, and they might ask for a simple doctor's note. They might ask for a blood and urine exam. And just remember, you're always at your healthiest right now, but not later on. So whatever you're at right now is the best as you're going to be.
Well, that's when you're buying a policy. But this is also when selling it, too?
This is also in selling
That's
it.
really interesting because I never
Yeah.
knew that if I was going to sell a term. Is that the same thing for a whole life?
Yeah, if a third-party company is looking to buy your insurance, you're going to have to go through underwriting as well. If you're looking to convert your term into a whole or a permanent life
Right.
insurance, you don't have to touch any of the underwriting. You're already insured for what you were when you signed up for that term.
Okay. That's interesting. I'm learning something new. Thank you.
Yeah, of course.
Because I didn't realize the underwriting was part of that.
Yeah, underwriting is really getting the best idea of what you're looking at and exactly what your value is for each policy. You'll see on some company websites that they'll have a calculator for you for your policy, how old you are, where you're at, and will give you a valuation of what your policy is worth. And that's a little scary. That's something that it's under their website. They have full control. So most likely it's not going to be very accurate because they want to buy your insurance at a good price. So that's something to be on the lookout for. Those calculators aren't going to be accurate, and there isn't going to be a fully accurate calculator to find.
Okay. So this has been real interesting. I think right now we're going to take a break for scamming and hacking with Arash. Arash, what ideas do you have for us today on how to protect ourselves from scamming and hacking? Arash,
Thank you for having me again.
we started talking about passwords last week, so let's talk more about them in detail, okay?
Sure.
Because I was talking and saying I have some sites that I go into because I deal a lot with insurance companies and things, and I see that they're growing.
Right.
I have one insurance company that you're not allowed to use any word in any dictionary.
Yep.
And I'm always trying to come up with stuff, and every 6 weeks it has to be changed.
Changed, correct. That is correct.
And sometimes it becomes overwhelming.
That is true. It's going to be very hard. So technically, that's why we talked about password management. I don't want to
Right.
promote any of them, but I use LastPass. There are Keeper, 1Password, Google. All those have the password management. And if you ask the password management to create a password for you, those app will create a new password with letter, symbol, and all those combinations, and they're not in the dictionary. And as you said, it's going to be longer and longer. So it's going to be 10 to 12 characters right now, maybe 15 for some, it's like for insurance companies, bank accounts, sometimes they want it more.
And these different places all want different things.
Definitely. What you brought is a very good subject last week. Bank account, if you want to generate a password, if you put your first name or last name in your password, they won't allow you. They recognize
I think that's a great idea.
Yeah, they recognize that. They won't allow you. If you put your birthday, they won't allow you as well. So they want you to create something that's not very common with you. We were talking about pattern for password last time, which is very good. So if you have a pattern that if you only know, for example, employee ID, some address of your childhood, something that you only know that, and then you just combine it together. That's a good idea as well. But now we talked about password. We briefly talked about what if something happened to me tomorrow. But we know trust and will were there for a long time. I think it's time to have a system for your passwords, for the loved ones, for the immediate family.
I'm absolutely.
Exactly, because if something happened to me, most of our things that we have, especially the younger generation, everything is online. They don't have any document on paper. There's paperless. So to access those digital items, you need a system. Your banks, stocks, crypto, houses, everything. Will, trust, everyone, lots of people I know, including me, keep them in a safe cloud storage. So if something happened to me and my wife or my kids don't have access, my parents, brother, whoever, sister, whoever is supposed to have access, don't have anything about it, it's going to be a very hard time. It's like we have a house and no one has the key except us. So it's very hard for them. They have to break the door. They have to do many things. Sometimes they can get into some safe boxes. Sometimes they can't. So it's better to just write some instruction about what we have for the loved ones. This is the way that you can access. This is our, for example, stocks in this account. This is our bank accounts.
So if you have a will and trust, I would be keeping that information with the will and trust.
That's a great idea, but some stuff you cannot put it on your will and trust yet. But you can have a system. For example, as you said, you can have a notebook that you put it on a safe box with instructions. Or you can have a password management with instruction that share with your immediate family, whoever you want to share.
So that means I know for me, when I go into my computer, I got to go into have a password to even get into my computer.
So someone needs
somebody needs to have that in order to.
And then that needs to be
access.
Very secure. One quick thing about passwords that we talked about, I just want to jump to it. Do not save your passwords on Google Chrome or Edge. I've been repeating this many times because that's very easy to hack. Use a password management system. Google has its own password management, but if you save it on Chrome, as soon as someone finds your computer password, they can easily get those passwords exported from Chrome or Edge. Or Safari is a different story. Apple is different.
Apple is different, but you just have to be protective of those passwords. Make sure somebody that you trust, or two people that you trust in case something happens to them, know how to get to those passwords so they can take care of your personal business.
Very true.
Thank you, Arash.
My pleasure.
We'll see you next week.
For sure. Thank you.
Okay. Bye. Welcome back to a Senior Citizens Forum. Thank you, Arash, for those great words of wisdom. And I always like to say, please never give out your personal information. That means your social security number, your bank account information. If somebody calls you about, something personal, just remember the IRS, the Border Patrol, because I've had calls from the Border Patrol, Medicare, Social Security, they're not going to call you. And if somebody calls you from, from Google, don't answer that phone call, don't respond. And also, if somebody calls you about Medicare, they're not supposed to be contacting you without your permission. So, I'm back with Josh. We were talking about life insurance, whole life, universal. Should you sell it or should you keep it? We gave examples of what you can do with the existing equity in a whole life or universal product. And we talked about term insurance and underwriting. So now we're going to go back and we're going to talk more about, what happens with that life insurance policy. What happens with that equity? As we were talking earlier. And do you have any stories you can share with us?
Yeah, of course. I have a couple, and one of them is about someone reaching retirement, that they started out in about their 20s, and they said, okay, I'm going to sit down, I'm going to put in money for the next 10 years. So they have long forgot about their money, their value, their cash accumulation. They are now retired. They have 3 houses, 2 of them rental properties, and they still have about $600,000 in their accumulation. So about $800,000 of a death benefit. And when it came time to talk more of, what do you want to do with this money? It now has turned into, okay, do I want to sell it? Do I want to use it? Do I want to transfer ownership? As all those are viable options. But the biggest one is using it for their long-term care. They're now retired. They have, they don't have much to do. Their expenses are a lot lower on the side of maintenance, but are a lot higher in terms of long-term care. So we're using distributions to put it into one of long-term care, but also taking out a part of it to put into an annuity, as one of the biggest fears is running out of money before you go. And even with my youth, I'm afraid of that. That's terrifying. So having a way to know with a guaranteed lifetime income rider that you're able to, you know that there is money coming no matter what, and that you'll be able to live a comfortable life. And this person is also able to have a nurse come in once a week and be able to do that, and that's all through their life insurance.
That's a really good thing, because we have a friend who provides care in the home, and we know from what he's been talking about that it's really expensive.
Yes.
But it's like you can't take care of yourself.
Yeah, and it's a scary thing to think about, and it doesn't matter how old you are, where you are, you might need it at any time. And to have that coverage and not burden your loved ones to be providing it for you is a very big deal. And to be able to provide that for yourself is some sort of freedom that we all need.
Yeah, we definitely need that freedom.
Yeah.
And I know I'm a senior, and I'm lucky I purchased long-term care long ago, okay? But if I would do it all over again, because I have it as a standalone product, I would have that same money could have been put into a life insurance policy, and I still would have had money for long-term care.
Right.
Because long-term care, I remember a couple of years ago, I had a friend that I have medical power of attorney for, and she could not afford for someone to come in. And when I went and I did the pricing, the least expensive I can find someone to come in for was like $20 an hour, and that's 24 hours.
Yeah.
That's
Probably
that's
talking
the
24
whole
hours.
day,
Yeah.
7 days a week.
That adds up real quick.
It adds up real quick, and now it's going to be even higher.
Yeah. Yeah.
So if you have a policy that provides you that, and you have that equity, what a great, I mean, you're almost, it's giving your family a gift.
Absolutely. Being able to not only pay for yourself, pay for your long-term care, but still leave something behind.
Yeah, but also not to put a burden onto your family.
Yeah. Yeah.
Because that's what happens. You put a burden onto your family.
And say you're looking at your policy now and you realize, oh no, like, I don't have these sort of riders. There's a thing called a 1035 exchange where you can change your policy into one that has these riders or something to, redo it but keep the same cash value. And that's something everyone should always look into and see what's the best coverage for me as of now.
Okay.
Just like your estate planning attorney, just like your trusts, you want to keep everything updated and have your ear to the ground. As we get older, we want everything to be set in stone.
Absolutely.
Yeah.
I mean, it's just, do you have any other examples for us today? Any other stories you can tell?
Yeah, I have one more. A big one is your business owners coming into retirement. That we've had restaurant owners who said, okay, well, I did my time. I have no one to pass it on to. I'm just going to close the doors and call it good. But there's multiple times where there are buyers out there who will buy your equipment, who will buy it up, and now you come across money of your business. And how are you going to get that distribution to you without the taxes overflowing, and now you're left with just enough for maybe a year of long-term care? Using life insurance, having a way to bring it tax-free through installments is another fantastic way of these business owner being able to retire comfortably and have an extra bit of wealth that they didn't realize they could have.
Okay. Was that the same as and I'm going from taking insurance out on your partner or your partner taking insurance out on you to make sure that you're all covered to protect yourselves?
Yeah, absolutely. It's the same way of having some sort of survivorship that, God forbid something happens tomorrow, that you and your loved ones are covered. Yeah.
And that's really important.
Yeah.
Do you have anything else to add for us today? I don't know.
I mean, the biggest thing is, do your research when it comes to, selling your policy. I usually advise against it, as it's more of a last resort, as there's much more you can do with it. Speak to an advisor, speak to, people you trust before looking into that, as normally the cost is a lot more inflated for them than you're going to get out of it than what.
Right. So I think that's real important, that when you're looking at selling your insurance, you need to find out exactly, if I have $1 million, how much of that am I actually going to get?
Yeah.
And will I qualify for that underwriting?
Yeah, it's very unlikely you'll get anywhere, even your half million, if you do have $1 million policy. It's very expensive for companies to buy it off from you. So you're not going to get a great deal. So say they realize that it costs, you're going to get about $10,000 off of buying your insurance, they're going to offer you $5,000 and saying that's how much it's worth.
I mean, and so if I got that's horrible.
Yeah.
Especially if I'm in the situation where this is my last resort because I've outlived all my rest of my money.
Right. Yeah, it's a scary situation to be in, and I hope and pray no one ends up there.
Yeah. So when you're watching those commercials, be careful about what you're doing. because you may be losing money by selling, and you may want to talk to your insurance company. If that insurance agent's not available, you may contact the insurance company that insurance goes to and talk to them and find out exactly what your insurance policy is worth. Because if you've had it, let's say 30 or 40 years, that illustration that's in that is, you've gone off the chart of the illustration. I don't know how else to say
No,
it.
you're going to realize you have a lot more than you think.
Than what you think. And you have equity that's not going to cost you anything to take out.
Right?
And there's a lot of things that you can do with that equity. But if you really need money desperately and you're ready to run out, definitely check with your insurance company to find out what your policy is worth. Because you may say, I had $100,000. You may find out that $100,000 is $500,000.
Right.
And you just don't know.
Yeah, you don't know until you know.
You don't know until you check it out.
Yeah.
But definitely research it. And ask a loved one if you don't know how to go about doing it. Make sure you ask a loved one to help you do that.
Right.
Okay? And we always want to say that you should definitely have, set up everything for your, I guess I don't want to talk about it, but those end of life matters when it comes up.
Yeah, it's a tough subject, but 100% of people die. So always be prepared. Your loved ones will not have a burden if you prepare correctly. So I always advise talk to a trusted agent or advisor.
Yeah. And that equity in that life insurance, as we were talking about earlier, you can do so much with it.
Yeah.
And the insurance company doesn't really care how you spend it.
Nope.
Because you can leave it to a charity.
Yep.
If you want to. I've talked to people who they have their beneficiaries no longer are there. Okay.
Right.
And now what are they going to do with that money?
Yeah, and there's many different ways of using it. One is a charity. I've even heard someone even have their beneficiary be their dog. That it's.
No, I've heard those stories too. Where I heard about one lady, she left the dog like $500,000, and how long does a dog live?
Yeah.
But this was her love, was her dog. Okay.
Yeah, I've heard one dog be insured or left with up to $7 million.
Yeah.
And although I don't advise that's the best way to leave it, but that's how they wanted it. So again, how life insurance is, you put it anywhere, and it is all up to you.
But that's interesting. If you're a major animal lover, and you're concerned about what's going to happen to your animals, you're leaving money for their care.
Right.
I'm an animal person, okay? So it's like, I can understand where they're coming from. But you got your grandchildren, or you may have great nieces and nephews, or you may have a friend. It doesn't have to be a blood relative.
It does not. It could be anyone.
And it can be a charity of something that you believe in.
Yep.
Okay? Or you want to endow some money to. It's really be very helpful to them. And they could put a plaque up in your name.
Yep, all in your name.
All in your name. So definitely research that policies that you have. Even those term insurance policies could be worth something. Look at them, make sure you know what you're doing with them. And this has been a fun educational show.
Yeah.
Thank you for coming on today. And we'll hope to have you back sometime, and we'll talk more about insurance, because it's so much about insurance.
Yes.
Okay.
Yeah. Thank you very much for having me, Janice.
You're welcome. Thank you for watching a Senior Citizens Forum, and we'll see you next week. Have a great week. Bye.